This is our Forex blog for December 6, 2013, and in my opinion, one of the easiest ways of trading is using our currency indexes. You can see the dollar as a chart, the euro as a chart, the yen, the pound, and I have on another layer for the other main pairs, Swiss, CAD, Australian, and New Zealand. And basically you want to look and trade the strongest currencies when they're going up versus the weakest. And underneath each chart you can see the perfect oscillator. You can use our currency meter, statistical trend or weakness tool as well. And underneath that is the daily, weekly, monthly. So you can see the euro's trend is up, the yen's trend is down, the dollar's trend on most time frames for most of the day was down, and most days with most currencies, our upper and lower bands are going to contain price. So you want to trade, if the dollar's going up, you want to trade it versus a weak currency. When it gets to the upper band, it's risky to continue to trade it. Now that being said, there's always one to maybe 2 days out of every 10 where a currency goes through the low and just keeps trending. But you can see the yen was weak starting at the beginning of the new trading session, and it couldn't get back above its hourly moving average. Yellow line here is the most actively traded price for the previous day in all the yen pairs, and it acts as an amazing support resistance area. And the fact that it can't get above that area and the trend is down on all time frames, you want to sell the yen versus the ones that are strongest. The pound started the day off strongest. It was found support right here, trended up, pulled back, trended up, pulled back, found support at its hourly. And as long as it's above the hourly on any pullback, you want to trade it versus the weak ones. It's that simple. You don't really need to do anything else. I'm not going to go into or Forex signals or anything that's even easier than this. I want to teach a method that professional traders and new traders both alike can trade with. Using the currency index, and especially when the yen maybe makes a little bit of a pullback up, a little bit of a pullback up, when it's kind of reset itself, the trend's likely to continue. When it's reset itself, the trend's likely to continue. So let's take a look at those two times, 6 o'clock. And notice one of the reasons I personally like the perfect oscillator is when you have a trend that's down, anytime it hits the plus 80 level or when it hits the upper Bollinger Band on this, these are high probability times for this to resume its downtrend. So we have, and let's not even confuse or add complexity by looking at the pound. Let's just look to buy the pound yen at 230, 530, and 8. Okay, 230, 530, and 8. Just trying to show how easy trading can be with our tools. 230, was it 530 or 530 or 6? That one didn't really pan out. In 8, and you can see it had a little bit of a pullback before shooting up. So you can see if you took all three of those trades, nice win here. You're in this trade right here where you're stopped underneath here. You have a tiny loss. You really want to wait for it to break out over the highs before you get in. This one did go above the highs of the previous few bars. This one didn't until about 8:30. But regardless, you have probably one win, a loss, and a win. Or you have a win, a loss, and a win. And a lot of traders, I can always spot a new trader. The first thing they ask me, what's the winning percentage of your system? Well, first of all, our tools work on multiple time frames, so you can scalp with them. You can trade intraday for 30 minutes to find 33-hour trades. You can do daily and weekly trades using your currency indexes with hourly data, 4-hour data, daily data, and even weekly data. You can swing trade or hold trades for months. So there's literally hundreds, if not thousands, of ways to trade with our tools. And on top of that, there's multiple time frames. So there's no way to say what the winning percentage is. But the point is, a good trading method works on all time frames. And the reason it works is it finds big wins and it has tiny losses. Don't worry about winning percentage because that's something that only brand new traders worry about. If you are not strong enough to take a trade after 1, 2, or 3 losing trades in a row, you have no business trading. It's that simple. Alright, so let's take a look at some of the other ones. The Swiss here is strong. The daily, weekly, monthly trend is up. And you can also see it broke out from below to above the previous day's high. So this is an incredibly strong one to be looking for buys. And again, using the perfect oscillator when it's at the lower bands, great place to be getting into trades. And notice the trend resumed every time. When you have all the time frame trends in your favor, the perfect oscillator, the reason I called it perfect is because it literally is perfect. It rarely ever is wrong, especially when you use it on two currencies simultaneous. So the Swiss was strong, the yen was weak, and again, we're looking to, and I'm going to line these up so we can find the exact times. When we scroll back in this, you'll be able to see when that one is at the low. See here? This one pulled back and sit near the lower perfect oscillator band. It's coming close to the -80. For this time of the day, it's a very decent pullback, and basically you want to draw your trend line over those bars high, and when it breaks that trend line is when you want to get in. Now, myself personally, I would have got in when it went over this previous bars high here at 93 versus getting in at 97, 98, because I'd rather have a 3 to 5 pip smaller loss. Get in that trade right here. Your stop's underneath the low. Now, at this point, it should continue up. If it doesn't, you can exit part of the trade with, 10, 15 pips profit. If it takes out the high, you draw your fibs on there, or you can use trailing stops. Most of the time, currencies that are super strong like this are going to go to the fib target. Let's just go up, and you can see it did. So you exit half your trade there. You move your stop up underneath these areas here, and then it just took off again. Most of the time when it's up this much, it's going to pull back. So you get out of the second half here. Your average profit somewhere around 114.30. You're in this trade a little bit under here. And the reason, again, why good traders focus on probabilities is not necessarily to have every single trade work, or 80% of trades, or even 60 or 70% of trades. Because some days trading is tough. You might be right 30 or 40% of the time on those days. Other days like today, you can see this one just absolutely took off. This is pretty much what you netted if you got out of half your trade here and the other half up here, somewhere in between there. You have 5 to 7 times more profit than what your risk is. And that's the key to trading. Small losses, big wins. And if you're a scalper, what you can do is you can use tick charts or range charts. Let's bring this up on a 5 pips per bar range chart. I'm going to show you my new Hurst center of gravity bands. These are phenomenal on multiple time frames. You go to add script, Hurst, and on super strong currencies like this, fast time frames, I just put in the 0.618 band, and basically you want to look to buy the lower band. So here's some of the trades that we would take today. In this trade right here, exploded up. In this trade right here, smaller profit. And again, you can use this on multiple time frames. So let's go to a smaller, faster one. I have yet to test this on range charts, but I have no reason to believe it wouldn't work. Let's go to a 50 tick chart. And so each of these bars is 50 price changes. And you can see, as this thing's going up, it's gyrating up and down. If you're a scalper and you're looking to pull 3 to 5 pips out of the market over and over and over again, and you're familiar with advanced betting theory, you can use these to, scalp 20, 30 pips, 50 pips out of the market most days. Let's go through these and look. Again, most of the time we want to trade during the active times of the day, and the trend's up, so we're mostly looking to buy. But the point is, when you have one currency that's strong and another one that's weak, and you see, going up like this, you might get into a trade here. It's debatable whether you made money in that. You probably lost. Get in here, you made money. Get in here, you made money. Get in here, you made a lot of money, actually. Get in here, you made money. And if you look at each of these moves, maybe you lose 4 or 5 pips. And you might have even lost 2 pips here. You made 5 pips here. You made 7 or 8 pips here. You got 5 pips here. And this is just in, let's click on the chart to see the time. This is 934 to 10. So obviously the beginning of the trends are superior usually to catching some of the moves. And you can have wider bands too if you want to be a little bit more safe. And you can optimize the bands for different currencies and time frames. If you hit the up and down arrow, it's going to make the bands wider. You hold this in, you can see now the bands will be real wide. And this, you can do it a little bit slower and wait and see what the bands will look like. And you can find bands that fit your style. Obviously, if you are a little bit longer term trader, you might want to have wider bands and kind of get into trades when they're beneath the band and the bar closes up, you're in. You can see this with wider bands. You got to, instead of 3 to 5 pips over and over again, you got a 10 to 15 pip win right here. And then we scroll into the future. And again, this band here, didn't succeed that well. And another way that I trade these bands are, if I'm in a trade here and it loses, I'll just kind of visually draw a trend line over there. The trend's up. You're in this trade right here. You put your stop underneath here if you're scalping. Anytime it kind of goes up and then down, I'm moving my stop to break even real quick, moving my stop up. You just yank it up over underneath each little mini pullback, and oftentimes you can catch 20, 30 pip wins sometimes. You'd be in this trade at 54, out somewhere here at 63. And again, this is just for those that want to scalp. Let me just show you one other example. We'll find another currency hopefully that is also weak. The pound went from an uptrend, which you can clearly see on the chart. It can't break out through the highs. You can also see on the chart, again, perfect oscillator showing you that it's at an extreme. These are great places to sell. Notice here, down, right here, down a lot, right here. Kind of went sideways, maybe failed, but you didn't get killed. And notice on the extreme on the downside, that was the end of the down move. If the daily, weekly, and monthly trend were super strong up, you'd want to buy here because oftentimes you'll get 30 to 50 pip bounces off of that. So using the currency indexes, you can also kind of draw your trend lines on there. When it breaks a trend line after trending up for hours, you can go short right here at 10. What's the strongest currency to be trading against this one that's likely to go down at 10? Well, it's not the yen. The dollar's weak, the euro's weak. The New Zealand's very strong today, as is the Australian and Swiss. So at 10 o'clock, you can be basically looking for pound Australian sells, weak pound, strong Australian, 10 o'clock. Now this one already started to go down a little bit earlier because the Australian was going up before that, but you can see it fell about 40 pips after 10. Let's take a look at the pound New Zealand, 10 o'clock. This one fell a lot more. Look, 50 pips, 100 pips, 150 pips, 200 pips. And again, one nice trade like that a week is all you need. In pound Swiss, 10 o'clock, we're looking to sell this as well. And looking at the chart, you can see this was the low. 10 o'clock's right here. You're kind of waiting for it to break down. You go short right there. You put your stop above the high. Most of the times, if you draw your fibs off of the last wave, you're going to get an idea of where your profit target is. So let's draw that on here. And really the key is small losses, big wins. And you can see this went all the way to the 2.0 move of the first. Usually probably 75 to 80%, this is the maximum distance it's going to go. And probably 85-90% of the time, that's the max distance ultimately before it bounces. So if I was in this trade, this is what my risk is. This is my likely reward. It could go here, and there's even less chance of it going here. But this is your potential profit versus your risk. And you can see you made 3.5 times or more what your risk is. And that's the key to trading. Whether you're using this on a 5, 10, 15, 30-minute chart, tick chart, range chart, doesn't matter. Small losses, big wins is the secret. Our currency index lets you see which currencies are very, very likely to continue to trend.